What's going on, everybody? Lawrence from financialthing.com. Hope everybody is having a great Thursday evening or daytime wherever you are. It's very warm over here at the moment. Getting into that summer Florida heat, which I kind of have mixed emotions about. I don't always love it, but it's more of a wintry place for me, but you get used to it. We're going to be talking about peer-to-peer lending today. We're going to take a quick look at the trading 212 portfolio at the end of the stream, because I just can't believe what's going on with oil at the moment and how this sector just continues to keep going in the upward cycle. But as talked about on Tuesday, how long can this last for? It's very, very interesting. So we're going to talk about a lot of different things today, peer-to-peer lending wise. Able rate, we've got some house crowd news, assets capital news. I'm going to take a look at some of the lend invest numbers too. I think that might be one of my biggest regrets, even though I know obviously lend invest is not peer-to-peer lending, but I think that's a company that probably should have gotten more attention fund-wise, rather than putting it in some of these other companies that have performed really not well. Lend invest seems to be on the upwards trend and continues to do well. So look at some numbers, what's going on that platform too. If you can do me a favor, please hit that thumbs up button if you like the stream. Do that for me right now. Subscribe, obviously, and consider becoming a Patreon member or joining the YouTube membership. No obligation, of course, but it's there if you choose to support. And what do we got coming up? Next Tuesday we'll be back as normal. I have some upcoming guest requests in for the stream, trying to get them on here. It's always a challenge, schedules and whatnot, but hopefully we'll have a new guest beginning of May. Got some ideas as to what's going on with that. So excited. Let me go ahead and close this out here. Quick hi to everybody in the stream as always who is here. We've got AccuChap in Accrington, Paul in Kenilworth, Alan Stratford in Worcestershire, home of the Worcestershire sauce. Is that where Worcestershire sauce came from, Alan? Or is that more of a just a coincidence? Peter is here in Leatherhead, of course. Stephen in Nottingham, Mike Powell. I've decided. Yeah, I do like the future. I like that theme song. I also haven't had a chance to look into some other music, but I do like that song. John Day is in Nottingham. Paul New in cloudy Wales. Says inflation over 7%. Quite scary, I agree. Richard McDougall in Western Germany. Guten Tag. John Morgan. No email reminder today. I think there was an email reminder that went out. I got it myself, so I usually send it to myself. So maybe it ended up in your spam folder. Brian in Woburn, Mark Mason here. Of course, nice to see you, Mark. Thanks for joining us. Let's get right into it. Let's get into some news. See what's going on in the peer-to-peer lending world. Hopefully this is a good piece of news. Look at this. Let me turn these off. We get a little bit more screen space. Whoops. No, hold on one second. Just give me a second here. Apparently my keys are not working. There we go. Look at this. Assets Capital celebrates its 9th birthday, obviously, for everybody that was here. We had Stuart Law on the stream last week. If you haven't had a chance to see it, watch it on Catch Up. It's uploaded to the Financial Thing YouTube channel. We had a really good chat with Stuart. But quite an achievement, I would say. Reached its 9th birthday, having lent out £1.5 billion to UK businesses and delivered £170 million in interest to investors. They obviously launched in 2013. They're now considered one of the biggest peer-to-peer lending platforms, if not the biggest in the UK. So they've taken the spot of the big threes that are now gone. And it's also said Assets Capital is Europe's largest property peer-to-peer lender. So I think that's a really good thing that they've been going for such a long time. I also wanted to take a look at their numbers because I was looking through their impact report. See if I can zoom in on this a little bit. See what the impact of Assets Capital has been on the housing market in the UK. So they said around £2.5 billion of new housing was funded by all of Assets companies since 1999. They've helped 1,110 small businesses, small and medium enterprises. 1.5 billion of new housing funded by Assets since 2013. They've delivered over 170 million pounds of interest. Quite impressive. They have 40,500 registered lenders. They have funded 1 in every 12 new home built by small and medium house builders in 2018, 19, and 21. So that's pretty cool. They've lent out £330 million to SMEs during the pandemic. They've got property leased to 5 charities. That's through Assets Exchange. And 16,000 new homes funded to date by the Assets Group since 1999. So real life impact that Assets Capital is making on the UK housing market, which is really nice to see. Sometimes we don't always think about what is the impact that these companies are actually having on the country and on businesses and on builders. So it's nice to see that there is that real back-end impact that is happening, especially since the UK obviously has a housing shortage. And we definitely need more housing business over, new homes being built in the UK. So that's pretty cool. They also, by the way, if you haven't had a chance to read this, it's at assets.com, ASSETZ.com. You can read this impact report. Case study, charity development. Supported housing provides crucial help to some of the most vulnerable people in their society. And Assets has worked with United Response, a charity providing a range of supported services for more than 2,000 people with learning disabilities, mental health needs, and physical disabilities to purchase a property for individuals with autism and their carers. So again, some of the social impact that Assets Capital, and then also funding low energy homes, which I'm sure people are happy to have that type of housing right now because of what's going on with the electricity hikes. So pretty cool. And then there's another case study about private investor here that they funded. Some other things on that impact report that I think is really cool. I really think it's so important to know what's going on in the background of where are we actually, helping people when we're lending money, and not just being about, oh, we got to make all these returns and we got to get the highest returns. Where are we actually helping, these businesses, and how is that impacting? So I enjoyed reading that Assets impact report. This is from January 2022, so you can check that out. Let's see what else we got here. Cryptocurrency-backed peer-to-peer lending platform raises $2.7 million. This is a company called Rockify. I always wonder where they come up with these names, Rockify. They've raised £2 million, a little bit over £2 million, and they've developed a protocol that leverages data and machine learning to facilitate under-collateralized loans through the blockchain. It sounds like a lot of French to some people, but I was curious. I just hopped on their website, and kind of looks cool. They're going to be able to spit out some kind of a credit score between 1 to 6, and it's really based around decentralized finance on the blockchain. 80% of the revenue is going to go to lenders, no deposits, locked up, control risk, and measured risk, and also serving both institutional and retail borrowers. Not sure if this is just a US company. I haven't looked quite into that. But we're also going to be offering a different types of lending and also no KYC under collateralized loans. So it'll be instant lending, which is one of the biggest problems I think about lending that exists right now is the speed of how things are processed. And this is something the blockchain is going to do. And I'm covering this because it is peer-to-peer lending. But the blockchain is going to be able to make lending much, much quicker for people. So I think they should take up some of that market share if it goes well. Shojin Property Partners closes partnerships in India and the Middle East. Of course, we had Shojin CEO Jatin, I can never get his name right, on the stream in the last couple of weeks. And they have been doing deals overseas, creating these partnerships. And they plan on offering investments in different countries. I've always been a little bit skeptical of things like that because I think it's hard to operate partnerships like that when you don't really know your market as well. I mean, if you're in the UK, you know the UK market. Trying to do deals in different countries can be challenging. But they seem to be moving ahead on that. They have formed local partnerships in countries, whereas lenders there invest in UK real estate loans. And also on Shojin, they have that one deal that is based in Malaysia. So they apparently are operating in Hong Kong, the Middle East, and East Africa. And they've closed partnerships in India and the Middle East. Jatin says the platform often chooses where to expand based on referrals or recommendation from its network of people, such as one of its 200 shareholders who has a connection in another country. I think it's important to really pay attention to this. If a platform that you're investing in changes its course drastically, you do have to be very aware of that. So it's always something that I pay attention to if I'm investing through these peer-to-peer lending companies. I always say I want them to stay the course. Some companies have done that. Some companies have not done that and have paid severe prices for it. Like if we talk about money thing, they used to do porn style lending, things that were tangible, and then they went into property and that things obviously didn't work out well for them. So we pay attention to things like that, but it looks like Shojin is on the right path. Let's see what here's actually a story about exactly that. The UK peer-to-peer versus the rest of the world. And the story covers UK peer-to-peer lending platforms that have faced challenges when expanding abroad, which is interesting. Peer-to-peer has been in the UK since 2005, but very few peer-to-peer companies have actually branched out into different countries. And this kind of article highlights why. Stuart Law is quoted in here saying that assets considered expanding outside of the UK in the past, but the market's so big in the UK that they could comfortably build a £5 billion to £10 billion loan book in the UK, and it takes a lot of focus to achieve that. So in essence, he's saying, why would I want to look overseas when there's so much opportunity in it? And in the UK, and it's a market that I understand. Stuart says they're ready for it, but it's not the right time because there's so much to do in the UK. Funding Circle makes an interesting case study. They were going to expand into Canada, but they had actually expanded US, Germany, and the Netherlands. Then obviously ended up closing its doors. They withdrew eventually from the Germany and the Netherlands because of slower and expected growth. And I think one of the reasons too is every country and culture is different when it comes to lending. What may work in one country may be a really hard thing to instill trust into customers in a different country. And I think that's something that Funding Circle saw happen when they withdrew from Germany and the Netherlands. Peer-to-peer lending has actually done pretty well in the US. There's a couple of companies that are trying to and are establishing offices in the United States, including, I believe, Just Us. Assets Capital had looked into the possibility of a US launch, but after looking at the landscape of regulation, of course very important, different property lending rules and distinct national lending culture with higher interest rates, he decided against it. And also Zopa looked at launching in Australia but concluded that it would be too challenging and too costly. See, Crowd Property launched in Australia, and they've raised, says it has raised Australian 1.5 million, and then in brackets 842 million pounds. I think that is a typo. But they've done pretty well over there and funded 2 phases of a development project in Australia, raising 952,000 Australian dollars with more projects live on its platform. We got Just Us launching in both the US and the EU. And then obviously Shojin expanding overseas, trying to create that international presence. The house crowd investors handed 3-week deadline for court submissions. I was reading the court documents about what's going on with the house crowd. And, well, one of the things is the Quantama, who is the administrator, they want to get paid. And you can see this in the court documents. There's kind of a summary of it on this Mouse in the Courtroom website blog. It said the substantive application seeks, among other things, relief to the ability of the administrators to pay their remuneration. I think I'm supposed to say remuneration, and expenses from the amounts recovered for investors in respect of loans made through the platform. So Quantama wants to get paid. They want to get paid from the recoveries that they have made on behalf of investors, because it is always important for the administrators to be paid first. They got to get their money. According to companies' records, there are over 3,000 unpaid investors who would have an interest in this relief payment. As yet, none of them have been made respondents to the application so as to avoid a potentially unmanageable and costly proceeding, which might result from a large number of investors being parties. Basically, they're saying that they want to give investors a chance to be able to write in and voice their opinion on how these payments are going to be made. The hearing that was on April 8th was designed to get the timetable started so they could figure out how to start, number one, to get Quantama paid, the administrator, and then how to distribute any money that's left over to investors. I don't think there's going to be much money left over, maybe in certain projects, but probably not that much. If you want to read these court documents, you can log into your house crowd dashboard, and you can see all the different documents out here. If you want to get into all that legal mumbo jumbo, you can. Anyway, that's a big mess. Yeah. But talking about wind downs, there have been some positive results in peer-to-peer lending with the wind down. Zopa, Rate Setter, Grove Street, Orca, Bond Mason, they've all had very positive wind downs. In fact, Bond Mason received 107% of investor funds that were actually paid back. So everybody got paid back. So it's not all doom and gloom out there in the peer-to-peer lending world when it comes to administrations. I know we talk about the ongoing administrations and unfortunately the ones that are in process right now, except for maybe LendingWorks, which is not an administration. That's just a wind down of the retail sector. Also Zopa. For the most part, the ones that are in trouble have not been very good results for the investors, but there is some silver linings on those dark clouds that we've been experiencing. Blend Network has received £120 million of backing for peer-to-peer property loans. They've got 120 million squid from family offices. Family offices are usually wealthy families that do their own investing, so Blender's been able to tap into that and scored 120 million pounds for them to expand into more loans and more developments. So good result for them. If you're a Bond Mason customer, they're going to be closing the platform soon, so if you need to get any tax information or documents off the platform, make sure you do it by the 30th of June 2020, because after that you will not be able to access those documents. So just a quick note. PropT, I like the name, unveils their first metaverse investments. European property investment platform PropT, which by the way is based in Lithuania. They have introduced cryptocurrency coins linked to digital land in the metaverse. Basically what this is saying is that they're going to sell some crypto coins like Decentraland, Sandbox. I'm really not sure how that fits their business model. I was taking a look at their website because they're primarily, and I'm not sure that they've launched yet. I don't know if they have or not. This is going to be an app. Oh, I guess you can get early access, so obviously they have launched. But let's see what's going on in there, what they actually offer. Profit like a landlord. You invest in real estate from residential and commercial to REITs, that is a real estate investment trust, and then digital land. So they're going to offer these coins, I guess, trying to be a place where you can go jack of all trades. Decentraland, Sandbox, Axie Infinity, ApeCoin, and Engine Coin. And then a couple of other ones. Pretty high risk stuff at the end of the day, these coins, so just something to check out. But they do have a pretty active Discord. But I think they got about 40,000 people waiting for early access to use this app, so a lot of people think it's going to be a good place to invest. LendInvest has doubled its loan book. LendInvest doubled its loan book in just 30 months as it predicts favorable housing market conditions, which will help boost its pre-tax profits. So again, one of my biggest regrets was not putting more money in LendInvest and putting too much money into Collateral and Money Thing and Anyway. A trading update from the alternative property lender for the year ending for the 31st of March revealed LendInvest assets under management representing deployed capital increased 36% annually to 2.1 billion. They have 2.1 billion pounds of assets under management. That's pretty fast growth. So they seem to be on the right path. By the way, if you're a LendInvest customer and you want to see some numbers, they're not very easy to find, but if you go into your statements tab here, you scroll all the way to the bottom, you can see self-select loan book statistics. You can kind of get a snapshot of LendInvest and how their book is performing. They have an average loan size of £704,000, quite big. Shows you the breakdown of where these properties are located. And also you can see every single loan that they have on their books. Look at this one, £12 million. That's a big one. And they got one for 5.4 million. So some pretty sizable loans. 6.6 million. Gives you all the details on there about interest rates and what the borrowers are paying. It's pretty good, but you can only access it if you have a LendInvest account. The other thing you can look at here is the loan performance statistics, which is always good to see. They have only had 0.01% capital loss off of 442 million pounds of originations total. So a very, very low capital losses, defaults are low, and enforcement 0.09%, arrears only 4%, out of term 7.55%. So look, they know what they're doing. They've proven it, and they keep on growing. Assets Capital has given £500 to every employee to help with the energy raises. I like that. That's pretty cool. Shojin has raised £3 million to fund global expansion plans. They've closed a £3 million funding round. They aim to raise another £2 million to fund its global expansion plans. The P2P property lending platform has raised $3 million as a first tranche of a Series A funding round at a valuation of £49 million. And it has launched the next tranche of funding to raise a further $2 million at a £55 million valuation. Now, I thought this was pretty funny, but I always wonder how these companies value what they think their companies are worth. And I always think it's higher. It's always much higher than it really is. I mean, valuations for companies should be based on pure numbers and accounting, what the company is turning over, how profitable it is. But sometimes that doesn't always go that way. And I found a funny video. I don't know if you've seen this. I'm going to show it to you. This is Mr. Fraser Funhead when he was on the Dragon's Den. And he was talking about his valuations. You should take a look at this. Tell me what you think. You know, when I first watched that video, back before I invested money into the house crowd, I saw that video and I was thinking, this guy, Fraser, there was something about that video that made me feel really uncomfortable. And I should have listened to my gut. And the way that the whole thing went down, I just didn't feel comfortable. And then I went to visit Fraser in, near Manchester in Hale. And I got a pretty good feeling about him. He seemed like a decent guy. We had some things in common. So I put a little bit of money in the platform, not a lot. But the Dragons knew on the Dragon's Den what the real story was. They knew that that business was not going to be a good business. And hence their reaction. I mean, obviously the Dragon's Den is an entertainment television show, but they also do know how to value businesses. So it's funny that I was watching that video and saw that part about the valuations, and especially since it kind of relates to that story about Shojin. And I'm not saying that Shojin's company isn't worth £55 million. I don't know. I don't know how much it's worth, but people can value their companies in different ways. And you saw there how Fraser thought his company was worth a lot more money than actually it was. Moving on, Able Rate may not be able to offer secondary market again. Obviously, they've gotten a slap on the wrist from the FCA. And I like David Bradley Ward. I think he's always been very transparent. He's been on the stream before. I do have to say that these peer-to-peer lending companies that are offering these high rates of return scare me because none of them have survived. And Able Rate, I think, may be one of the last few remaining peer-to-peer lending companies that does offer these crazy rates. Now, they're having problems with the FCA. And I probably would guesstimate to say that they will not be able to offer a secondary market again. I don't know that it may not. I'm predicting right now that they won't. And that's going to create a problem for them because then the liquidity dries up. If you can't sell your loans, there is no liquidity in the platform, then I think people lose confidence. And it's pretty sad. I think David's done a good job over there. As far as I know, I think some of the loans are have had some trouble. Again, I was put a very small amount of money in there just to test the platform. I never wanted to put a big amount. I never felt really comfortable with those rates of returns. So yeah, the FCA is not happy with, I think, with the secondary market within peer-to-peer in general. So it's not just able rate. I think they'll be coming down maybe on some other peer-to-peer lending companies too. But the secondary market is now closed. It closed on April the 8th. So if you had been hoping to get out of your loans, maybe you did, maybe you didn't. Regulator urged, the FCA has been urged to extend celebrity promotion bans to crypto. So the FCA is saying we don't want any celebrities promoting things like gambling site, lottery sites. And now there are people out there that are saying they should extend that to any celebrities promoting cryptocurrency. Yeah. I don't know about that. I mean, I think it's a bit of a tricky one. Although there have been celebrities that have pumped, some crypto projects that have done poorly. So I get that. There was an update on Collateral creditors through BDO. This is the administrator for Collateral. There's been an update on March the 30th, 2022, which I was taking a quick look at before the stream. They're pretty much having the same thing that the house crowd administrators are trying to figure out how to pay people back and also how to get paid themselves. So exactly the same thing going on. This is one that I can pretty much say without a doubt that anybody that was a collateral investor is going to be taking a loss on their tax returns, because I don't foresee any of those funds coming back into the investors' pockets, because there was also fraud claims out there for the two brothers that ran this company. This was a bad one. But if you are interested, you can go to BDO's website. I'll put a link in the description if you want to read about what's going on with the administration over there. I think it's important to know about these things because it kind of stops us from making the same mistakes again. I know I'm a lot more informed than I was when I first got into peer-to-peer lending 5-6 years ago. And I'm very much more cautious than I was before. When I first started out, I just assumed everybody was trustworthy. I was very naive. I kind of went in with my eyes closed into some platforms and didn't do good due diligence. I think, too, some of the due diligence wouldn't have made any difference. I probably would have still invested. But, reading about these things that have happened will definitely prepare you for anything in the future. If you're thinking about investing in a new company, having that experience from these documents is a good thing for your knowledge base, for the noggin, for the brain. And finally, let's have a look at the Trading 212 portfolio. I know it's not a stock stream tonight, but I had a look because why not? Why can't I zoom in? Hold on. Maybe you can't see that. I don't know. Anyway. There we go. A little bit over 18,609. This Peabody Energy trade has been good. The coal trade just keeps on going up for some reason. Well, we know why. If you watched on Tuesday, you'll know why. A lot of things going on with coal at the moment. 5.66% today and up 19.56 for the week. So that continues to do well. I don't know when this oil run is going to stop, but I think it's got to run out of steam eventually. The question is the timing. When do you pull the plug on all of this and try to find a different sector that is going to perform well? Because some of the sectors like tech, obviously this crypto mining stock that I bought has done really poorly, down 55% over the last year. But tech is not doing really well. The Alibaba pulling the plug on that was a good move. That thing has just absolutely gotten last 3 months down 27.14%. So $95.78 at the moment. I was trying to figure out how much we actually bought for. The one thing I don't like about Trading 212 is you cannot search your transactions by at least in the history by company, but because I don't own it anymore, I can't. But you can you know, it's in your portfolio. If you wanted to look at the history of your buys and sells, you can actually do that down here on the bottom, which I don't know if you can see, but you can't obviously. Let me see if I can move this up. I don't know if I can, but at the bottom under, if you go to the very bottom of the Trading 212 account, there's a history button, and it will show you for that, just that particular stock, what you paid for it. But Alibaba, we can't do that because we don't own it anymore in the portfolio, but I was interested to see if I can search. No, that's not working either. Just looking back through the history when we exited that. We sold out at 103 there after taking a bit of a loss on it. So yeah, tech is really taking a beating at the moment. So it's going to be interesting trying to find some other sector to rotate into out of this. But that's always the big question, is when is the right time to move out? Anyway, I hope you're enjoying the information. Hit that thumbs up if you can. This is going to be a short stream tonight because it was a little bit slow in the peer-to-peer lending news. There wasn't a lot of great news this week. See if you have any interesting comments. John says, what inflation-inspired changes should we be making? Well, you know, one of the things is you don't want to hold pounds in your bank account because you are going to lose money on that every year as the pound gets devalued. I think that these inflation numbers are probably peaked, but I actually wouldn't be surprised. The more I've read into it, I wouldn't be surprised if next month we get an even worse inflation number. So I think you can invest, you know, invest in things that are deflationary, and you just hope that the stock market doesn't decide to take a massive poo, because that's going to be the one problem. Again, not financial advice, but there could be a case for gold. You know, if the financial markets crash, I don't think anything is safe. Everything will go. Cryptocurrencies, everything. Gold. But just the number one thing is don't leave money in your bank account that you don't need in there. McTavish 2, hello from Macclesfield. Nice to see you, Mr. McTavish. I'll check on the email delivery. I've switched over to a new email software, so I'll go look in the statistics and see if they're being delivered. Invest22, welcome. Yeah, oh, there you go. You found the email in your junk. Yeah, it's we've used this new service called Sandy. We were on MailChimp before, but MailChimp is too expensive, so switched over. Maybe that wasn't a good move. It looks like a lot of emails are going in the junk folder. That's not good. Breaking news, CG & Co. administrators of Funding Secure are now commencing formal action regarding the negligent valuations. Well, good. Thank God. It's about time. Oh, I don't know why that's on there. It should be noted that the joint administrators have been in discussions with solicitors regarding the negligent valuations since early 2020, so it took them 14 months. That's crazy. Yeah, negligent valuations in these companies that are in administration have been rampant. Thanks for the update, Mark. I know you're heavily involved with that Funding Secure situation. Elon Musk offered $40 billion to buy Twitter. Yeah, he's up to something for sure. He wants to take that company over. Apparently make it private. So it is remuneration. It's so hard to say that. Why would they not say remuneration? Orca shareholders lost all their money and the CEO went to Money Dashboard, which has also just gone pear-shaped and had to sell off cheap. Yeah, this is why I don't invest through Cedars loans, and you just have such a good chance that your money, you're never going to get it back off those Cedars shares unless you sell it on their market. Yeah, the FCA apparently is, Richard, is going to be looking at wind down plans to beef them up. Speaking cryptocurrency, Binance has UST stablecoin, that's Luna, at 21% interest with a 30-day notice staking rewards. This is insane on the #1 main platform like Binance and not more risky, smaller exchanges. Yeah, well, it is insane, but if you think about what are they actually doing with that UST, so if you own that stable coin, which is pegged to the US dollar at 1-to-1, what they're doing is they're actually taking your UST and they're loaning it to people at a much higher rate than 21%. So I don't know if Binance does leverage trading. I can't remember, but if they are loaning it to people who are doing leveraging on trades, then they're going to make a lot more than 21%. So they can afford to pay people like you and I 21%. So it's not that unfathomable if you think about it in that respect. And they have ways of automatically liquidating these traders too. If they are not doing well in the trades, there's things in place that get triggered by the software and the blockchain. So not actually that unthinkable. It is high for sure, and that rate will change. It's probably more like a promotional rate too. I don't know how long it will stay at 21%. It's pretty juicy though. Landwise has 2 overdue loans already. Wow, that was quick. I'll have to wait and see. Okay, I think that's going to do it today. Hey, look at that, 49 minutes, everybody. We made it under an hour. Hope you enjoyed the stream. We'll be back on Tuesday for some stocks, some cryptocurrencies. Hope everybody has a nice weekend. The weather's warming up, hopefully, in the UK. And you'll get out there and take the dog for a walk, play some golf, kick the football around. I don't know, whatever you're into. Take a hike. But we'll see you on Tuesday. Thank you again to everybody. Appreciate you being here. Hope you enjoyed it. And we'll see you next week. Take care. Bye.